And for the U.S. market, the much anticipated first U.S. presidential debate between Donald Trump and Hillary Clinton is one of the major highlights of the week. And as the market enters into the fourth quarter of the year, my colleague in New York City, Jill Maladrino, will be talking to us about what traders are looking at as near-term catalysts and what worked best for the third quarter. Good afternoon, or rather, good morning, Jill. Thank you for joining us. It's morning out there. Good morning. How are you doing today? Hello, Jill.
Hi, can you hear me?
Yeah, I can hear you, Jill. Good morning. It must have been a very busy week for you and the market, particularly with the presidential debate. Talk us through the market sentiment towards this.
It's been a very busy week for traders on Wall Street. Markets seemingly expressed a preference for the status quo as futures responded positively following the performance of the debates. Interestingly, the Mexican peso, which is sensitive to trade policy, was also up solidly in response. Given recent headlines, for example, both financial services and healthcare sectors will be areas of critical focus. Also, both candidates will likely continue to highlight the need for more cybersecurity and help boost investor sentiment for that group, and we saw that in the third quarter. And of course, there are the macro issues of trade and taxation. A lot can happen between now and November 8th. There are two more debates to come, and volatility is still likely to come back into the market over the coming weeks. But the markets are saying the election picture changed very little following Monday night's debate. If anything, I think voters remain just as undecided as they did before the debates.
Right. The other big story this week is crude oil. Surprisingly, a deal was struck at the OPEC meeting in Algiers.
Reuters reported on Wednesday that OPEC reached a deal to limit oil production, although full details are unlikely to be firmed up before the formal meeting in November. But they are producing at record levels now. So will it really do anything to draw down the oil supply glut? You have to remember that OPEC, especially the members geographically in the Middle East, they're what's part of the swing producers, meaning they can produce at much lower oil prices than anyone else on the planet can. The total cost per barrel in Saudi Arabia to produce oil is just about $9. Therefore, they have the leverage in the market right now.
Now, what are the near-term catalysts traders are focusing on now?
Today's session will be important since it is the last trading day of the quarter, and that's what's known as window dressing, meaning funds buy the top performing equities and sell the worst performing in an effort to improve the appearance of the fund's performance. Historically, this leads to market strength, although recent trends may suggest otherwise. So now we look to October and to see what potential opportunities exist. If you look back over the last 20 years, October has, on average, been a good month for the S&P 500. Since 1996, the information technology sector has outperformed the S&P by about 1.25%. The caveat for this October is we are in an election year, and that typically lends to more volatility.
Now, talking about the quarter that is about to end, what worked best in that quarter? That's the third quarter.
Without a doubt, the tech sector. Bespoke research points out of the 11 S&P 500 sectors, two have outperformed: tech and financials, tech by a very wide margin. And that might change today because of the volatility we're seeing in financials. Currently, 6 of the top 10 largest market cap companies in the S&P are tech firms. Since the start of the third quarter, Apple, Google, Amazon, and Facebook, they've gained double digits. Now, this is what's interesting. Other sectors known for their yields, like consumer staples and real estate, they're down on the quarter. So it certainly was a quarter where investors' preference switched back to growth over yield. Investors have been coming to U.S. stocks, particularly those two sectors, in search of yield, since easy monetary policy has kept bonds and treasuries down.
So what is the outlook for the market in the fourth quarter?
The big question is volatility coming back? In the immediate future, global banking is the concern, as your European guest said. It's reported that about 10 hedge funds were reducing their exposure to Deutsche Bank, sending its shares falling by as much as 9% yesterday to new all-time lows, as counterparty risk and capital concerns plagued the financial sector. Longer term, traders will look to the national election, just about a month away. We have 2 more Fed meetings and the key retail selling season on the horizon. Analysts expect another down quarter for earnings and for monetary policy to continue to drive the markets. Historically, the markets gets what's called a Santa Claus rally going into the end of the year, but analysts this year see more range-bound trade like we had all summer, with just about a 1% move lower by the end of the year. Now, this is according to a Bloomberg poll. So again, we see more range-bound trade, choppy trade, and with maybe some volatility coming back into the market.
Right, thank you very much for your time, Jill. That was a wonderful analysis. Just enjoy your weekend. Thank you very much, Jill. And in Congo, Democratic Republic of Congo, the central bank has raised the main interest rate from 2 to 7% in a bid to contain quickening inflation as low commodity prices continue to batter the economy of Africa's top copper producer. The bank will also intervene in the foreign exchange market today to ease pressure on the Central African nation's franc currency. Okay, let's look back here in Nigeria, looking at the Nigeria's debt market, and I'm being joined by Chioma Udo of GT Bank. Good afternoon, Chioma.
Good afternoon.
So how would you assess the market for the third quarter, and of course, what is your outlook like in the next quarter, that's the final quarter?
There's massive liquidity in the market right now. And the market is gapping, honestly, with brown market gap up to like 480 as of this morning. Hopefully, if liquidity comes into the market, we should see a revaluation in the market. But besides that, we just continue seeing the naira depreciate.
Right. Now, generally, talking about the third quarter that it's about ending today, what's your assessment of that market?
Please, can you come again? I can't hear your question.
The third quarter ends today, Chioma. What's your general assessment of the market for the third quarter? How has the market performed for this quarter?
It's been a very interesting market. We've seen the naira lead down to 480. On the fixed income side, we've seen interest rates go to the yield of about 22% on the 1-year paper. Mostly tightening on the fixed income, and then the naira losing value. But we hope to see liquidity coming to the market. That will help the value of the naira.
Now, looking into next week, and of course, as we enter the new quarter, what is your outlook?
There's a TV auction next week. About 160 billion is going to be offered at the auction. We hopefully see that the tightening stance will continue, so we think that they're going to pay us, at least on the 1 year, at any yield above 20%.
All right. Thank you very much, Chioma, for your time.